All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Friday, the 15th of January, 2021, in San Antonio, Texas. Pretty nice day out there. Hopefully, you guys are doing well where you are. We got a lot to talk about today: dollar strength, market weakness everywhere else. Again, nothing surprising here, guys. If you're surprised at what's going on. Either you're brand new and you've never heard me before, or you haven't been paying attention, purposely didn't want to hear it, or ignored it kind of thing. But we'll see how things continue to play out here. There's no guarantee that the dollar's bottomed yet, and we'll talk about that. We've still got a little bit further we've got to go to start feeling more confident about that. But, it sure as heck is making an argument for it right now. So hopefully y'all are doing well. Let's see who's here already. I can see I got this restream chat started a little bit earlier, a little bit late. So I see Sir Hold is here, Scott's here, Thomas Payne, what's going on, man? Hank is here. Abba, what's up? Let me see here. Crypto Mowgli, Telluride, Satoshi Ray Bitcoin. Good to see you guys. Data's here as well. Nevlusian checking in. Gian, what's going on? I says, I'm scalping Bitcoin with a monitor and watching you in the other one. Hope you're doing well. I am. Let me see here. Excuse me. Hank says the EU markets are doing just fine. Let me see here. Tellurider's mentioning Box L, which is one of the one of the hot takes we've done, setups we had. It says not showing any market weakness. Yeah, that's good, man. I'll tell you what, finding them hot takes last night was definitely a chore. So many, as I told our Tier 3 members last night, early this morning, late last night, so many of these stocks are topped out or have just come off the tops or are nearly there. I mean, it's hard to find anything worth doing anything, because when we do, especially stocks for hot takes, most services that you guys might look at, they're going to give you all these little $2 or $3 moves. We're looking for huge, 30%, 50%, 100+%. As I told you, we've got at least one from June that's already up. One of our members got into it late, and they're still up about 1,000% right now. We look for good trades. That's what it is. So hopefully we'll continue on with that. Let me see here. What's going on, Ben Huevos? My thoughts on the large amount of troops at the Capitol. They're worried. They already talked about all that, moving in all the National Guard and everything, and bringing them in over there. Concerned about, disgruntled voters with Trump and everything. I think they're probably making a bigger deal out of it than they need to be. There's a lot of people throwing around the word insurrection, without a lot of understanding of what that means in context of the Constitution and whatnot. There's things that have to happen and they didn't happen. I don't personally. I've got a law degree, so there's that. But I'm in no way a constitutional scholar. But that said, reading the Constitution the way it is and understanding law the way I do, with my degree, I don't see that he violated that. And I'm not a Trump fan. You guys that follow me know that. I'm not a Biden fan either. I'm not a political fan. Not a fan of politics at all. But the reality of it is, the Dems are doing what they want to do, or what they're taking advantage of a situation in order to gain more traction in the minds of voters, of course. That's what politics does, guys. I don't think he was, again, in terms of the way it's written there in the Constitution, the way things are usually viewed, I don't think he was inciting an insurrection or anything like that. But they're going to do it and pull it on. So because of that, the states, the Washington, D.C. is going to pull up a lot of troops and everything. It just is what it is, guys. It's a bunch of over dramatic things going on, really. So that's the way I kind of see that it's going on at the moment here. So it is what it is. And what are you going to do about it, guys? You got to understand, at the end of the day, excuse me, much like we are considered as retail, considered liquidity to other time frame traders, as citizens of your country, you're really considered nothing much of anything to your government. So it is what it is, guys. Any political leader that tries to say, oh, we're doing this for you, is a bunch of nonsense, guys. Remember, people who are drawn to power do so because they intend to use that power. All right? The people that you want in power are the ones that aren't going to use it. They're the ones that are hard-pressed to use it. But those people aren't the ones that are going into government, guys. The ones who go into government are the ones that want to use power. And whether they believe that what they're doing is truly right or not, the fact is they're going to use that power to do it. So, you just have to understand where you sit in relation to power. And that's where it kind of sits there. Hey there, Mads. Good to see you. Deep Quantum is here as well. Crypto Girl checking in. Let me see here. Brian, what's up, man? Ross Mark is here. Am I spreading COVID-19? No. I've just got, with the weather, the allergies making my throat and everything kind of dry and all that. And I think this is going to be a thing today. Causing me to cough here a bit. Sorry about that. But yeah, things are what it is. Interesting. Oscar, what's up? He says, I think all of those markets, crypto, stocks, gold, silver, doesn't matter. We are not going back to pre-COVID world. No, we're not. Again, government, the one thing about government is it tends to always ask for more power under the guise of national security or your safety or your health. But that power is never given back. It's always like, oh, well, we need this temporarily to do this, and that. And then it continues to hold on to that power. Here in the U.S., one of the biggest, more recent understandings of that was 2001, September 11th, 2001. We had and then after that we passed the Patriot Act, which gave the government a whole heck more of power. And that's never been given back since then. And then here with COVID. Again, the Fed trying to usurp some more power there in the way in which it puts money out into the public. It creates all these different programs to kind of circumvent the rules to keep it from, directly sending payments out, basically. And so we just see this. This is what it is, guys. This is what government is. That's what it does. So... it's not, I don't believe that absolute power corrupts absolutely. I believe that power draws to it those who intend to use it. That's what it is. And so, whether you believe you're right or wrong doesn't mean you are right or wrong. Right? I guess I should say whether you believe that what you're doing is right doesn't mean it's right. But if you've got power, you're going to do it anyway. So it is what it is. Anyway, guys, hey, listen, join us. We've extended our 25% off through the end of the month. So join us at howtotradetowin.com. We'd love to have you there. It's 25% off any membership, any level, any amount of time. Remember, we have our normal monthly rates. And then if you buy 3 months, 6 months, or 12 months at a time, you get a pretty big discount on it, especially the more you buy. And then so on top of that, you get that discount plus you get an additional 25% off on top of that. So if you're looking to jump into what we're doing here, guys, now is the time to do it. Well over 50 hours. I got to get this all changed here. Well over 50 hours of educational content right now for Tier 3. I mean, Tier 3 is the way to go, guys. Again, if you're Tier 1 or 2, you've never done Tier 3, I'd say take advantage of the 25%. Do it for 1 month. That may be, really, it may be all you decide you need. But, man, the setups, the education, all that stuff that's in there, a lot of opportunity, a lot more, worth a heck of a lot more, guys, than what you'd pay there. So we'd love to have you there. Let's go ahead and jump on in here and see where we're at. If you already have a subscription with us, like maybe you bought some time or something, here's what I would suggest. Go ahead and if you want to add to it, go ahead and purchase another membership and then send me a DM over in Discord. And I'll log into the back end of the site, into the database later today, and I'll make sure that that you have all your time added in there, that it doesn't overlap any of it. So I'll make sure you're all set up. Brian Riley says the hot takes on Tier 3 are well worth it. I agree. Andre says, yes, power attracts narcissists. It does. Again, a lot of people believe in what, Bernie Sanders says and everything. There's not a lot of economic reality to what he says, or AOC, but, people believe in it because they think with their hearts rather than their logic. And he may even believe what he says. I don't know if he believes what he says, but he may. But just because he believes it to be true or whatever he's saying doesn't mean it is. But getting power means that you're going to do it. So, I use him because he's an extreme. Again, same thing with Trump, same thing with whatever, guys. At the end of the day, if you've got power, you're going to use it. The ones that we want in power should be the ones that don't want to be there. But then again, they don't ever go there, right? We only get the people in power who want to be there. Good times, right? Let me see here. Crypto Girl says this week's Tier 3 training. By the way, we do that every week with Tier 3 every Wednesday. I teach y'all something new. Crypto Girl saying this week's Tier 3 training was awesome. Thank you so much. Looking forward to next week's training. Thank you so much. I appreciate it. So what's going on here, guys? Again, if you follow us a couple of times a week here, or if you're in Discord, again, we've talked about the fact that our range is actually this $12,000 here. From the swing high, from the all-time high down to this 30,100 swing low, which means there's a lot of things that could happen in here. And so what I've tried to do each day here is outline the possibilities and let you know what levels you're looking at to invalidate or validate them. Because if it's down here, you're going to have people, that say buy the dip here, and they say, oh, it's definitely going up. Well, it may be, but how is it going up? I mean, first of all, this could be A, B, and C lower here. Okay? It could be that this right here is ABC is 1, 2, 3. ABC here for 3, 4. And then it's got an ABC up for 5 that gets it just above the swing high. It gets you up here, and that's it. That's 5. Or this could be a 1, 2. An ABC is a 1 and a 2 instead of an expanding wedge there. Could be a contracting wedge, right? And so you would have ABC is 1, 2, ABC is 3, 4, ABC is 5. And so then you've got it ending, around 45,000. The one I'm looking at the moment here, though, until it's proven not to be, is, let me see. Oh, here it is. It's the possibility of this triangle here. So the triangle's in red. So you go ABC down for A, ABC up for B, ABC down for C. If this is a triangle playing out, wave C here just cannot go below wave A. It can't go below 30,100. Now, there's an argument to be made here. Maybe like a 1, 2, 3, 4, 5 gives you A, and then B, and then this is C. So then C's bottomed out. If it is, we'd probably expect wave D to come up here around 37,750, 37,800 kind of area. But wave D just cannot go above wave B here. So if price drops below wave A, or right now moves up above wave B, the triangle's invalidated in either case. Okay? So right now I'm just trying to see, do we go from here up to around 37,750 or 37,800 area? And then reverse and come down. If we do that in 3 waves up to that area and then 3 waves back down toward the pivot here, I think we have the triangle. In that case, our pattern target here is probably going to get us right around 47,800 based on the height of the triangle here. And if wave E ends on the pivot. So that's what I'd be looking for. But again, it is possible this is ABC and done here. This is, I've got 5 up here. It's possible this is 5, but I don't think so. I think this is maybe a 3. And this is a 4 that we're working on either here or still working on. And we have 5 to go. If the 4 is done here, if this is an ABC down, then again, you have the possibility you have an ABC as 1 and a 2, and you'll have an ABC up as a 3 and a 4, and ABC as a 5, and what you'll have is an ending diagonal. All right? If that's the case, then what you're going to expect from this low here is you're going to expect price to continue up above this swing high here up above 39,800. Oh, I guess up above 40,127. Okay? You expect to go up above there. If that's a 1 and a 2, then wave 3 has to be less than. Wave 3 has to end prior to this R1 pivot here on the H1, on the 1 hour time frame. Because your waves have to contract. So wave 1 is going to be the longest, wave 3 is going to be shorter, and wave 5 is going to be shorter than that. And that's what gives you then this wedge look to it. You see? So basically you'll get like, again, A, B, C is 1, 2, and then A, B, C is 3, and you have 4, and you'll have A, B, C is 5. And that's what we would be coming through here, potentially. So, I mean, that's really where it is. It just comes, okay, watch your levels now. If it reverses prior to that 40,127, if it reverses prior to that, then look for it to target the pivot here. And it finishes out a triangle. And then you have that target up here that I already talked about, 47,800 area. If it goes up through wave B, then you can say that this is probably wave 4 done here, and this is wave 5 as a ending diagonal. And so again, wave 3 should continue up higher here to somewhere between the all-time high and that R1 pivot in there. And then it'll pull back 3, and then you go up a little bit higher for 5, and then that'll be it. It'll come down. The only other thought, again, is that price doesn't go above wave B and continues down here below wave A, which is 30,100. That's your other option. If that happens, then wave C, so this would be A, this would be B, and this would potentially be C. And wave C will equal wave A at 28,271. So that becomes kind of your initial target area. It can go further, but that becomes your initial target area. Now, the whole other possibility here, guys, again, is that this is 5 and this is done. And if this is 5 and done, this could be 1, this could be 2. And in which case, you're looking for a lot further down with 3. I know you guys don't want to hear that. I know everybody promises you pie in the sky, Bitcoin's going up forever without ever, pulling back kind of idea. And I don't necessarily believe this. I don't think this is the top here until we start moving below 28,215. Then it starts becoming more a reality, because at that point, wave 3 is down here around 20,845. As long as price stays up here and heads up, or, around this 100% area and then continues up, I'm still looking at it finishing a 5. But once we drop below that 28,270 and it starts getting closer to that 20,800 area there, my bias starts becoming more likely that this is the top up here, and this is a 1 and a 2, and you got it that way. So right now we just play levels, guys. You just watch your levels. It's as simple. I mean, it really is as simple as that. You don't have to get more complicated than that. I've come out a little bit more complicated here, talking about the different, exact wave kind of movements that you look for with Elliott Wave. But the question really is, if you're short from where you are here, does price continue up? Does it get above wave B, or does it reject prior to that and come back toward the pivot? If it goes above wave B, this is wave 4, you've got wave 5 in progress. If it rejects prior to that and comes back toward the pivot, you're printing the triangle probably. So watch for a reversal off the pivot area. If, however, it comes back down here below where you entered, below this swing low here, well, then you need to be more cautious, because then you want to see, does it get below wave A here? Because if it gets below wave A, then again, you've got at least an A, B, C, potentially a 1, 2, 3. So you're just watching those levels. That's it. Let me see here. Let me zoom in a little bit on the 15-minute here. This is the cluster that I was talking about. I removed that now. With Discord, we were talking about last night about if it advanced through the descending channel resistance, where the target would be. But if it declined through that where we were looking, and it, so it did decline through it, went exactly where we were looking. Good call last night on all that. The big thing here, let me go back out here again. I think I removed it already. We were watching this large channel here. Right there. And so this large channel here that I just put up, based on the height of that, this breakdown has a target down here of 32,298. So it is possible that maybe we have 1, 2, 3, 4, 5 is a 1. That's a 2. This is a 3. That's a 4. And we have that lower down for a 5 maybe. And in that case, that would be a 1 down, 2 back up. And you're looking heading lower here again is what we're looking at that way. If we look at this right here as being a leading diagonal, because you have the overlaps between 1 and 4, we're just beyond the 1618. That's a wave 3 right there. If that's a wave 3, let's see where wave 4 pulls back. Is that 50% maybe? Excuse me. It's just below the 50%. It's a solid wave 4. If we get a reversal here and it continues down, or from around this area, 1, 2, 3, 4, 5. Then we'd look for generally wave 5 to reach the 61.8. So at least here at 33,695. But again, probably looking for it to get all the way down here to get this pattern target. Down there at 32,298. We got to see what happens right here. Right now, it's just playing around the 1 hour and 4 hour pivot right now. I mean, that's your reality, guys. Anybody out there promising you anything is really just blowing smoke up your rear end. Make sure you don't allow that to happen. We've got a lot of possibilities because we've got a range. Many new traders, amateur traders, look at this and they go, that's not a range, that's $12,000. Well, yeah, it's $12,000, but it's a range. Swing high to swing low, which means there's possibilities as long as price is within this range, there's multiple possibilities that could be playing out. So you just watch your levels to start validating or validating what's going on. Unfortunately, for a lot of new traders, that's tough for them to do because that means that they can't just buy and close their eyes and let it go. You got to be more, you have to think more about what you're doing. Let me kind of catch up with you guys here. Can it be an ABC down? This move up was B, and we're working on 2 of C. Well, yeah, sure. That's what we're talking about. I think you probably asked that before I was talking about that. But yeah, again, that gets you that C moving down there. Michael J, what's going on? He says, why do waves have to contract? Because if it's an ending diagonal as a wedge, as a contracting wedge, that's what we do. So in ending diagonal in Elliott Wave, ending diagonals necessarily are all corrective waves. That means they're all let me get this over here. That means every wave is an A, so 1 is an A, B, C. 2 is an A, B, C as usual. 3 is an A, B, C, corrective. 4 is an A, B, C as usual. And 5 is an A, B, C, corrective. If it's an ending diagonal like this, they necessarily have to all be 3-wave series. Remember, normally what we look for is 1, 2, 3, 4, 5 is 1. 3 is 2, 1, 2, 3, 4, 5 is 3, 4 is 5, 4 is 3, and then of course 5 is 5. So your 1, 3, and 5 are all 5 waves, normally. But in an ending diagonal, they have to all be 3 waves. So that leads to this contracting thing here. Now, there is the possibility, again, that that waves 1 through 4 are done, and instead of contracting, the ending diagonal looks like this. It's expanding. And in that case, what you're going to have, you still have your 3s. So there's your 1, there's your 2. But wave 3 is going to be larger than wave 1, which we would have already. And then 4 comes back down. And then 5 has to be larger than wave 3, because that gives you that expanding flat. So that's why we would have to have that. If we're looking at it. That's why I said, there's a lot of information here. If you're new, that may, new to Elliott Wave, there might be a lot of stuff. for you to figure out. That's why I said just watch for your levels first. Watch to see if you, because those ideas of an ending diagonal here may not even turn out if price doesn't get above B. Especially if it turns down, drops below A. So that's a lot of worrying about it that you don't have to worry about. So just pay attention to what's happening locally here. And if we zoom in again to the 15-minute, it suggests that possibly we've got a leading diagonal here. So 1, 2, 3, 4, 5. So this gives us a 1, 2. And then 1, 2, 3, 4, 5 gives us a 3. A, B, C gives us a 4. And then we'll look for 5 more down. And if we have that, then the triangle is likely not going to play, isn't going to play out, I don't believe. We could still get an A, B, C. Again, wave C here. If this triangle is A, B, and we've got C printing, wave C can print all the way down here. It just can't go below the swing low here. It has to be contracting. Your waves have to come together to create a triangle. If it drops below it, it's no longer contracting, so it's not going to be a triangle. So that's what we're watching there. Excuse me. I'm sorry about that. Let me see here. TV Canal says they shorted the 786 from 39.6. Good short coming off that, for sure. Oscar says it's done. Tether stopped printing and exit scamming. Let's see here. Let me see what's going on here. Hank's looking for at least 28. Again, that'll get you pretty close to around where that 1-to-1 ratio is for what would be wave C and wave A. Initially, though, I don't know. I guess if we take this down here, if we take this demand structure here and pull it down on the 15-minute, they actually get you the EQ pretty close to that target. Pretty close to that 1-to-1, 100% target there. The way I have it pulled, the reason why I have it pulled here is because, let me see here, is it the 1 hour? Yeah. This is the 1 hour. Nope, not 1 hour, I'm sorry. Let me see here, 4 hour? Yes. It's the 4 hour demand structure right here, which has that EQ at around 28,780 kind of area. But as you saw on the 15-minute, if we go ahead and just work on the 15-minute demand structure here, which is just basically this wick down here, that aligns our demand structure EQ pretty closely to the expected target there with wave C, where wave C equals wave A. So yeah, some possibilities in that still as it plays out. You just got to watch your levels as it goes through there. Let's see here. Let me see here. Let me see here. Oscar's concerned about Tether blowing up. Yeah, again, guys, I brought you that. I introduced you to that one. Colorado Travis, his tweet there about, where he noticed the differences between Tether and USD. Depending on when, at what stage of the advance the market's in. Whether it's a dip or whether it's a sell, whether it's a top kind of area, and how the money flows. Whereas if it's more of a realistic top, the money flows to USD, and that Tether peg drops. Otherwise, the money flows to from Tether. So I don't know. Who knows what's going on with Tether, guys? I still kind of hold the same position I have here for a while, since you guys have been asking about this for a couple of years now, that, it seems to me that unless Tether is just a bunch of real idiots, they've got at least a 70 to 80% covered, reserves. And if they have 70 to 80% reserves, then even if they lose something in court there, they'll probably just get a fine and, told to bring it back up, bring your reserves back up and whatnot. Because again, they're pretty big, and if the court, if the court does anything really huge to them, basically makes them go out of business, a lot of people are going to lose a lot of money, a lot of normal people, and the courts don't want to do that. And so that's why usually, you guys get all upset about the big companies getting off with a slap on the wrist, a fine or whatever you say. But often, if it was to go any further than that, then a whole lot of people would be hurt, which means the economy would be hurt. I know that doesn't gel with the way that justice is supposed to work, right? At least not here in the U.S., but it is what it is. Now, this Tether debate's coming up again a lot here lately. Tether Council talking about some other things, talking about how their reserves are, some of their reserves are in Bitcoin and whatnot. That they supposedly, they're saying that the Bitcoin that they have in their reserves is what they bought in 2015 and 16. Whether that's true or not, who knows? But if the Bitcoin price were to really go down, let's say it was to do what we've been talking about, some larger correction where it goes back down to 3,000, 1,000, something like that. That could cause a lot of problems depending on how much of the reserve Tether actually has in Bitcoin. That could cause a lot, and that could do a lot toward imploding Tether. A lot more than I think what government is likely to do. The market itself would come back to haunt them. But it only depends on how much they actually have in it. The problem is there's no transparency. We don't know what they have. And, I don't know, guys. To me, if you're supposed to be trusting your money with them, I don't know. Why would you trust your money with something that you don't even know if it's guaranteed? Because there isn't any FDIC insurance here. If they don't have it and you need it, but they can't pay it, guess what? You ain't getting it. And so, if it's only $100 or $1,000 or something to you, maybe that's nothing. But if you're a large institution, if you're talking 50 million, 10 million, 100 million, that becomes a real concern. Now, I know Sam over at Alameda or whatever says that they do a lot of direct Tether redemptions. There was guys, man, I tell you what, Colorado Travis and Santiago Fund really kind of pushing this, trying to get a clearer understanding of what's going on with Tether. They're not saying that anything nefarious is definitely going on, but they're saying, listen, guys, if you've got this money and you're putting it in and you're trusting it to them, but yet you don't understand what's going on, that's crazy. And it is crazy. It is crazy. So they've got a lot of great questions going on there, and what going on with everything. So, like I said, Sam says, hey, we redeem quite a large bit of Tether directly to USD. So maybe there's nothing nefarious going on. Maybe Tether's just making sure a couple of their biggest clients can do that just so they can carry on the farce. If you're a believer that Tether isn't being honest and upfront, and your money's at a lot more risk than what people believe. If you believe that, then you might be willing to say, well, maybe people, these people like Sam and a few others, Tether allows them to redeem directly to cash, so that way they can go around and talk about how great it is and how real it is and how everything is not the way people are worried about, so they can continue on with what they're doing. I don't know. I know one of the big wigs with Tether is a derivatives guy, so that's always interesting. Derivatives of derivatives of derivatives, Think 2008 mortgage securities. Ideas like that. That's the kind of background the guy comes from. I can't remember his name right now. I was looking into that when I was diving into it a few years back. And again, that doesn't mean that they're doing anything wrong. I'm just saying he comes from that background, so I definitely, it wouldn't surprise me if something was going on, but I'm definitely not saying that anything is definitely going on or not. I don't know. But I think, again, if you're putting your money into something, I think that, it behooves you to make sure that you understand what you're putting it into. I think if you don't understand, if you don't know what's going on because they're not being clear, they're not being transparent, I don't know, to me, as somebody who's much less risk adverse, to me, that's a big red flag. Maybe something's going on, maybe it's not. But if something is going on and your money's in there, you may lose it. If nothing's going on, then you're fine. But if something is, then you lose it. There's lots of other ways to get into stablecoins these days anyway. USDC and stuff like that. But, some of them KYC. USDC is KYC, right? AML. So I guess you kind of just decide what kind of risk you're willing to put on, with whatever you're doing. But I keep saying, and I'm going to keep saying here so you guys don't go off here saying, oh, look, he's saying Tether's being nefarious. No, I'm not saying that at all. I'm saying they could be. But there's nothing definitively saying that they are. There's nothing definitively saying they aren't. And all of that, whether you believe they are or aren't, is all on them because of their lack of transparency, their refusal to be transparent. And not even their refusal to be transparent, but their purposeful being opaque. They're not even just not trying to be transparent. They're trying to be opaque. They're trying to be closed off. I don't know. That's just my thoughts on it. So I don't know what's going on. Could be, could not. No way to know right now. If you're concerned, you shouldn't be in them. As long as people believe in Tether working, Tether will work. Even if it is something nefarious going on, something more going on. As long as people believe that it's working and things are all fine, it'll continue to work. It's the way Ponzi scheme works. When people stop believing, that's when it falls. Hey there, BlockTech. Good to see you. Let me see here. BlockTech says Tether ain't going anywhere. Let's see here. Jeez, whiz. I'm sorry, that guys. So yeah, it's just kind of the way that we're looking at it. Again, guys, the idea here is just to keep y'all thinking. It's to make sure that y'all aren't jumping off emotionally anywhere. I'm not in here saying that you're right or you're wrong or anything. I'm just saying, listen, here are the things and here are probably the ways that you should potentially be thinking about them. What you do with it, that's up to you. I can't force you not to be emotional. I can't force you to ignore the things that are being said. Or force you not to ignore them. So, again, I just provide information here. I give my thoughts and the way that I would look at it, the way I look at it, the way that things, the kind of process that I'm using. Do with that what you may. Yeah. Let me see here. Oscar says they're still in China so they can replace like Jack Ma in the snap of a fingers, and Tether will or is already controlled by the Republic. Ooh, let's jump down that rabbit hole. There's so much possibility, guys, and I'm not a big fan of conspiracy theories, but I'm also not a big fan of belittling conspiracy theories. Because the reality of it is, if you look throughout history, often the big things that happened were once conspiracy theories, right? So often they once were already that. People laughed it off, whatever, and then all of a sudden, oh my God, look, it's real. Conspiracy theory, the CIA transports drugs, right? Well, yeah, and then we had the big CIA plane that crashed with how many tons of cocaine? I mean, come on, guys. Conspiracy theories are just conspiracy theories until they no longer are, right? By the way, if we zoom in here to the 5-minute, we may have an ABC, so A, B, C, D. I would expect to move up probably from about where it's at, a little bit up here, if this is a triangle, if this is a wave 4 triangle here, because you'd have this as A, B, C, D, and E. So this just cannot go below this swing low here, this 35, 350, and 64 cents. If price drops below that right now, let me make sure. Yeah. If it drops below that right now, that invalidates the idea that this is a triangle. If it plays out like this, though, where this is a triangle, you've got a pattern target of $2,121 below the wave E termination point. So if wave E terminates right up around this H4 pivot, That gives you a target down here of around 33,783, which is basically the S3 pivot on the 5-minute. Now, that doesn't mean that's as far as price can go. Price can reverse prior to that or after that. But generally, when we do a triangle, we use the height of the triangle as the pattern target. And that's our initial target. As you can see, that still doesn't get us below this target here, which is based on that ascending channel. Let me put it up there where it breaks out actually on the 5-minute here. So that gives us a target down here of around 32,341. That's the S4 on the 5-minute. So, I mean, this could really just be a 1, 2, 3, 4, 5, potentially, as it does it here. But we should look, if this plays out as a triangle here, we should look at it as getting around this S3 pivot probably. Let's see here. Satoshi Ray Bitcoin says the phrase conspiracy theory was first written on a CIA document from the 70s. I didn't know that. Telluride says, I used to think that fake news was a bit of a conspiracy theory. So I can get you all off track over here, right? Data says gravity is just a government invention to keep people stationary on Earth and not floating around. And clouds just keep us from seeing the floating government cities in the sky. Oh, man, that's good stuff. Anyway, so here's what we got with Bitcoin, right? So what does that mean? Well, there you go. That's what's going on, guys. This is the DXY. This is the dollar. We've had this strong move up, from back here off the lows on the 6th of January. Now, we've got a couple of possibilities going on here. The first one is the black count, which says wave 1 is done, wave 2 is done, and we're working on wave 3 here of 3. Or 3 of 1 of 3, okay? But nonetheless, we're in the very, very beginnings of this wave 3, Roman numeral 3 wave, okay? If that's the case, then we've got a 1 and a 2, and wave 3 should be a minimum of 91.149. And that would then give us a wave 5 right up around that large descending resistance that started back in March. This is the main resistance. If we get above that, things are looking really bullish at that point. Right now, I at the beginning of this episode here, I mentioned that the DXY is not confirmed to bottom yet. It hasn't. We need to at least get above wave 4 right here. So we have to at least get above this supply structure here at 91.018. If we can do that, that's the first clue that the bottom may be in. If we can move impulsively through this descending resistance here, then that adds a lot of confidence to the idea that the bottom's in. Because again, remember that descending resistance, let me close all this off here, is this large channel here, resistance from back here in March. So we had a touch there in March where it started. We have a touch here in November. And so we've got 2 touches already. So it's a line. It's a trend line. So pushing up through it is a significant event. Now, what else do we have locally? Well, we have, this possible descending channel thing going on here. The pattern target based on the height of that is right up here around 92.261. All right. Now, the other thought here is the red count. The red count suggests maybe we're doing 1, and this move down to about a 50% retracement was just wave A. And this move up right now is potentially just a regular flat. But if it makes it up here to the supply structure EQ at around 90.87, it becomes an expanded flat. If it's an expanded flat, then we should expect C to come on down here around the 61.8 at about 89.79. If it's a regular flat and it reverses from where it's at here, we should generally expect price to come back around where wave A is back here at about 89.93 or so. And that would finish off to, or this expanded flat would finish off to and head up. All these are really bullish counts, whether you have the pullback locally here or you're continuing up higher or whatever. They're all bullish for right now. So there's a lot to be concerned about if you're a dollar bear right now. But you aren't disproven at the moment. Again, we need to at least get above this wave 4 here just to start feeling like, okay, that's the first clue that maybe that bottom's in. And then, of course, you want to get it, and you really want an impulsive move through this descending resistance. You really want to see a nice, strong move, big candles going through that. That'll add a lot of confidence to the idea that this is the bottom here. And that's important because if the DXY is going up, then everything else is going to have a lot of trouble. Let me see here. I'm secretly a car mechanic called The Wizard. I have another YouTube channel. Google me. Not really. I don't know enough about cars. I used to when I was young, but that was before they got all computerized now. Let me see here. Oh, chemtrails, huh? Anyway, so that's kind of where we're looking at with that. So what does that mean for everything else? Well, you come here to the Dow Jones, and look at the Dow Jones here, guys. You've got this strong move off a potential wave 5 up here. I've got a wave 3 with the triangle. Here's a wave 4. So A, B, C, D, E is 4. And then we've got an ending diagonal here. 1, 2, 3, 4, 5. And then this gets us down. So we go 1, 2, 1, 2. Let me see here. 1, 2. 1, 2, 3, 4, 5 gives us 3, 4, 5. So our initial wave 2 target is right about where we're at right now. Right there about the 50% retracement. That's our initial wave 2. Now, if it's going to continue going up through there, I think it's going to fill in this gap and it's going to get up here probably around 30,991 to 31,000 area. That $10 range. I think that's probably where it'll go. But right now, we're going to see if we get a reversal off this here now. And if we do get a reversal off this S1 pivot here lower, drop down below today's swing low there at 30,612.70 cents. If we get down below that, that gives us a minimum wave 3 target of 29,920. And at that point, I think you're really kind of looking like that top's probably in. Now, again, like with the DXY having to get above that wave 4, we've at least got to get below this wave 4. So this 29,881. Oh, let me see here. 29,881 and 80 cents. We've got to get below that. If we get below that, that's the first clue that the top's probably in there. And again, this being a 1, 2, getting a 3 down there, that would set us up for that. That would give us a minimum wave 5 down here of 29,686 and 90 cents. Let me kind of catch up here. But that's just the Dow Jones. That's just the more broad-based index, right? So we can look at the S&P E-minis here. Whoops. Let me see here. We can look at the S&P E-minis here, which are still kind of broad-based, but leaning toward tech. And you see that we've got potentially the same idea going on here, potentially working on this wave 3. Now with this ending diagonal, and notice all these are ending diagonals here. With this one, we really want to see a decline below this wedge support. That would be our first clue that maybe this top is in here. If the top is in, we've got a 1, we've got a 2. And we're potentially, let me see here. This might be, see, this is, if this is a 3 here, this is a short 3. Right beyond the 123.6, not quite to the 138.2. Because you can go 1, 2. And then, actually, you know what? You could have a 1, 2. 1, 2, 3, 4, 5, 3, 4, 5. You could actually have a 1, 2 working on a 3 here. That might be actually what's going on there. Which would then give us a wave 3 down here at around 36.99.50. I think that may be what's going on here if I look at this. 1, 2, 3, 4, 5. Gives us a 1, a short 2. And then maybe this is a 1, 2 of 3 here. But price just can't go above this swing high up here if that's the case. Right there above 37.84.50. Just can't go above that. If it reverses prior to that, this is probably a 1, 2, 1, 2. And then in that case, wave 3 is going to be even lower than 36.99 because you have to get through this set of 5 here, depending on where that goes. So if it were to reverse off this recent advance here, this 3 off of this 1, 2, 3 here would actually be closer to 36.86. So again, you don't have to worry about all that. What you have to look at are your levels. Does it get below this ascending support? It's already dropped below the pivot. We're at the end of the week, so the pivot's going to change. They're going to come back next week, different pivots. But right now, we've dropped below it. We want to see, do we get it lower? Do we get below this swing low here? If we get below this swing low, do we get below wave E of wave 4 here? Again, notice the wave 4. When you think you're at a top, you want price to move down in 5 waves below wave 4. So that's kind of where we're looking. That's 36.95 and 75 cents. So then we can go to the tech-heavy, the very tech-heavy NASDAQ right here. So we went from the very broad-based, and we're narrowing down to tech stocks here now, basically. And there's, it's making a good argument that the top may be in here. We've got 1, 2, 3, 4, 5. So we've got 5 down, ABC up. So we've got a potential 1, 2 here. If this is a 1, 2, that gives us a minimum wave 3 down here of 12,514. You can see that the wedge, that the ending diagonal here for wave 5, what would be wave 5, has been broken with that drop through. Now you just want to see, do we get follow through to continue on down? I think we might. So no confirmation again that the top is in yet, but as we look at the other ones, if it's a wedge here, breakdown of wedge support first, drop down through wave 4 is the next move. So in this case, your wave 4 is right here. I don't know why I've got this as 1, 2, 3, 4, 5 here. This should be A, B, C, D, E. But anyway, it's right here as a triangle at a low of 12,607 and 68 cents. So you want to get below that. Let me go and change out that 1, 2, 3, 4, 5. I just now noticed I had that on there. It makes no sense. B, C, D, E. There we go. So now we got the triangle situated there. So again, loss of wedge support and then a drop down below the end of wave B here. But really what you're looking for, your wave 4 is over here. Your wave 4 is down here at 12,226 and 13 cents. So that's your next target once you're getting the breakdown here and through the triangle here. You really want to see it get down below this wave 4 over here to really kind of say, you know what, that top's probably in. It's making a good case for it at the moment, but until it actually gets down and continues that move down, there's still potential upside in it. Let me see here. Chris is actually a DJ. Notice how he's always testing his microphone. 1, 2, 1, 2. Yeah, not really. Let me see here. How do I see Cardano USDT? Oh, I don't know. Let's see here. Do I have a Cardano chart? Let's see here. I don't look at it a whole lot. Looks like I last looked at it in the 18th of last month. What were we looking at then? We were looking at possibility of a top there. We didn't. It broke out here, so we're still within this ascending channel here. Let me see here. I mean, man, if I look at this, God, dog, if I look at this, potentially 1, 2, 3, just because of the extension on that. As you saw, that was almost a 2.0 on that extension right here. Actually, it is a 2.0 there. So potentially work on a wave 3 that it's trying to potentially finish up here. This first advance had a pullback between 50 and 61.8. So that makes sense. Again, probably a 1-2. Let me see here. It looks like we probably got a triangle here for a 4 maybe. So 1, 2, 3, 4 here. So A, B, C. Nope, drops down low here, sorry. Because it would go A. Does it go up higher here? 16.9. Let me see here. What do we got here at top? 17.628. We've got 17.456. So A, B, C, D, E. We got a possible triangle on this. Looking right here. Or I guess I could just kind of do it like that. But your count off these lows would basically be like a... I think you'd have a 1, A, B, C as a 2. So an expanded flat. And then you'd have a 3. And then it looks like a 4 right here. And then that gives us a 1, 2, 3, 4, 5 still to go. Which would align with the idea that maybe, Bitcoin still got one more fifth wave to go. So again, you look at this as 1, 2 here. Just over the 3.618, almost to the 4.236 there. The decline on this wave 4 has been right there. It's been a pretty deep decline on that, but there was a large run up too. So, you have this little short wave 2, a larger wave 4 there. If I'm looking at this, I would think this is an ABC down and we're on our way up. So we usually look for the 61.8 that's still below the top there. So then we start looking potentially the 78.6, which is 37.619, or the 1 up here, the 1-to-1 up here at 41.653. So those would be the two targets I'd look at on it, just based on this daily chart right here for wave 5 to get in there. If we draw a wave 2 channel, it's going to look like this. Yeah. So that's what I'd look there as far as Cardano goes, I think. Now here's the thing. If this is a 1, 2 and that becomes a 3, let's see here. This is your 1, 2, 3 up here. Let's say it's this shorter target there. Generally we're going to look for a pullback toward, at least 38.2 here. So at least 26.142. Potentially 50 here. I could see it getting to this previous supply structure here that it just kind of shoots up through and comes back as demand. So I could see something like that. Basically move up here, back down here, and then up higher. And it just depends on how far that pullback goes to where wave 5 goes. If this is just a wave 3 up here. So we'll say we get it there. Let's say we just do the 38.2 like we'd normally expect. That gives us a 61.8 up here of 44.684, which would be where I would then expect this larger, at least to end here. 1, 2, 3, 4, 5 up there. But again, it's a pretty large extension. I mean, if this is going to be an ABC, that's a pretty big extension. Again, the idea being ABC, ABC, and then 1, 2, 3, 4, 5. Now, what's interesting about this idea, again, I know it's nothing you guys want to hear, but I mean, this is a pretty clear ABC down, right? And this right now is just 3 waves up, right? So what if this is the top right here around this 37,631 or so? And you just get that ABC. That gets you right here around this previous top. All of a sudden, this is your range that you're playing with here. This is your trading range. Kind of idea here. Let me see. There we go. And so if I look at that, I go, okay, well, maybe we've got price to come all the way back down here as, as a flat. So ABC down for A, ABC up for B. And because it would end out at 90 to 105% of wave A, then you would expect generally for wave C to come back down to around the same 90 to 105% of where wave A ends. ABC is A, ABC is B, and 5 waves down, back down here toward this area. I think those are the two possibilities right now when you're looking at it. Like I said, if we do that, and this is an A and this is a B, I mean, C extends quite a bit. But with the volatility and the lack of liquidity, in the market, in this particular market, seeing these extensions up here really aren't too overly surprising. This getting up here would get us around just above between 2 and 2.272. Remember, 3s are usually around the 1.618. So it could extend up higher there. With A to B, A to C ratios, we usually look for wave C to equal wave A, which would have happened right here around 21,275. But again, the lack of liquidity and the volatility in this market suggests that we could have an overextension of wave C here, beyond that 1-to-1. So I think, until it proves what it's doing up in this area, don't be thinking it's definitely got to go up higher. I mean, and here's the thing, even as a wave 5, even if we get this pullback here for wave 4 and we get that wave 5, it's just a bit higher than this high over here from May of 2018. So, just keep your options open, guys. This doesn't say it has. I'm not telling you, like so many of y'all have thought before, I'm not telling you that it has to come back down here, but I'm saying until it tells you it's not going to come back down here. Right now, we're an ABC and an ABC. Until we have a clear 5 waves up, this is an ABC right now, and this is still an ABC. So you would look for it to finish out here, go a little bit higher here, pull back for wave 4, and then push to a new high for wave 5. And that gets you then 5 waves up. And at that point, you can kind of look and go, okay, yeah, this doesn't look like that ABC anymore. And but even at that point, you've still got to pull back. I mean, you're still, if you're getting up there to, to that higher target up there, this would still only complete wave 1. So you still have to pull back for wave 2. So potentially here around, if we hit that wave 5 target up there around 44,645, you're still looking most likely for a minimum pullback toward, 18 cents, at least. Potentially 14.37 cents or even, just under 11 cents, the 78.6. 78.6 actually looks like a pretty decent area here. Because if we look at this, notice it's resistance, support, resistance, resistance. I mean, that's your flip. So, if this is going to be 5 up, I really think maybe you're probably looking at that move up there toward that, that 44.5 area. And probably the pull back down here toward 11 cents before it heads up for wave 3. But if it doesn't get you your 5 waves up, if it still sticks at 3 and starts coming back on you here, especially you're getting below this wave 1 swing high here, I think then we look much lower here. So we play it as it comes out, guys. Let me see here. CoinLab reached a deal in Mt. Gox claim. 90% of Bitcoin can be claimed by creditors. Yeah, so that's always interesting. There's always the idea of Mt. Gox. What's going on with that, right? And so my thoughts still today haven't changed where they were. So the whole thing is, anybody who's got a claim to their Bitcoin there with Mt. Gox, I think the fact that it's taken them so long to get through this has actually been beneficial to them, because most of them would have likely sold already, would have lost money on it already. Now at this point, you think Mt. Gox was back there around, $1,000, $1,100 Bitcoin was at, right? And now we're up at what, 40,000? So significant bit there. So I say that because the question that becomes, these guys haven't had their money all this time, and now they finally got it. Do they go ahead and cash out? Some of them will, sure. But what percentage of them actually cash out? Because it's a lot of Bitcoin. Do they believe the narrative that Bitcoin's going to go to 100,000? Do they maybe believe it, but they want to just go ahead and lock in some profits now and get out because it's been a nightmare for them, this whole situation, right? Never ignore human psychology, guys. Let everybody else in the market be emotional. Don't you be emotional. So I think, if people wonder where can supply come from, well, I think it's possible it could come from there. And all it needs, guys, here's the thing. You go, oh, everybody's locking it away and they swear to God they're not going to sell and whatever. That's such nonsense, guys. You're human beings. Oh, by the way, we went up above there, so no ABCD triangle here. But could still be ABC moving up here. At the end of the day, you got to think, if you're in their place, right? Let's say you have, let's go and zoom out here a bit, guys. I can't even get it on this chart. It was a little bit higher. There's probably right around here or so. So let's say you've got 10 Bitcoin from there. And at that time it was worth, about $10,000 or so at the high there, right? Now that 10 Bitcoin at 36,200 is worth $362,000. Most people, most human beings are going to cash out. At least a decent bit of that. And I think you'd be silly not to. Especially having been through everything you went through and no telling what's going to go on, no guarantees, but now you were forced to hold, through all that. I think you'd be stupid not to take the profit on that. You can always get back in, but you lock in profits. You guarantee that no matter what happens, you made money. Some people aren't going to do that. But I'd be interested in what proportion of the of those receiving Bitcoin for the Mt. Gox thing actually you're going to take profit, because it doesn't take a lot. Here's the thing, guys. If you get enough of that selling coming on to start it down, algos kick in, which increases more sell pressure. Retail gets scared, they sell, more sell pressure, and next thing you know, you're down 50%. Along the way, coming down like that, most of those large people who came in just recently are going to get out because they're immediately underwater, guys. If you're down 50% from 40,000, you're looking at 20,000. A lot of these guys who are talking out now started buying above 20,000. So they're almost instantly, negative. You combine that with the dollar rising. That's the wrong chart here. With the dollar here rising, there's not a lot of incentive for the big players to stick around. And if it's dropping like it is, there isn't enough retail demand to sop up all that supply that's going to come in. And there isn't going to be enough over-the-counter buying, I don't believe, to take all that large selling for, to compensate for it. So the large selling then becomes, remember all that Michael Saylor's like, oh yeah, we hired this company and they were buying essentially so many Bitcoin every 60 seconds. You get the same idea in reverse. You get the selling every 60 seconds. Constant supply pressure. Now, none of this is saying any of this has to happen. It's just saying that if this does happen, there's your narrative. There's why it happens. There's how it happens. I'm telling you right now, guys, the big guys are not you. It's not a few $100s or a few $1,000s or whatever in the market. We're talking tens of millions, maybe hundreds of millions of dollars. So if Bitcoin drops against them, they're losing value. They're losing significant value. Maybe Saylor will hold on longer than most because he's been so vocal about it. But he's a human being just like everybody else. Does he really take the chance of running his company into the ground by continuing to hold on even though it's dropping? Because if the value of his company is dropping, guess what? People are going to sell their shares. They're going to get out, which means the value of his company is going to continue to drop. And your ability to get debt with your company is based on your company value. How does he get debt to do things? He's using his debt right now to buy Bitcoin. Well, that backfires against him if price drops fast and all of a sudden he's in the hole on that, right? How do you issue more debt if the value of your company's dropping? Because you've made all this investment into Bitcoin that's dropping. This is some realistic thoughts here, guys, to get through the emotion that I know is floating out there right now. Let me see here. Am I saying it's like tulip? Are you talking to me? Am I saying that it's like tulip bulbs? No, I'm not saying that. Could be. We don't know. That's the thing, guys. Here's the thing I want you guys to understand. You tend to follow people online that that really kind of massage your ego. They fit your bias. So if you're bullish on Bitcoin, you don't want to hear people like me, and you tend not to listen to people like me. You tend to ignore us, shrug us off like it's nothing. I'm not saying it's definitely going to go down. I'm saying, hey, listen, it could start a cascading effect. And, and I only say this because everybody says, oh, where's all the supply going to come from? Well, I just detailed how it would happen, potentially. One way. So my doing that is not to say it's definitely going to happen, but it's to kind of get your attention to go, okay, well, there is a way that this could happen. So that way you're kind of removing yourself a little bit emotionally from it so you can prepare yourself in case it does, and you can make sure that you can lock in some profit. I mean, at the end of the day, that's the goal, right? Lock in profit, rinse and repeat, right? So what does that mean for everything else right now? Well, so we've seen what the rising dollar is doing to the stock market and everything right now. If you're a gold bug, or if you think gold is something's going to save you. Remember, my gold target is still down there around $900. It's just continued to drop off here. This is ABC up. It looks like we are ABC done. Now, yeah, look, it couldn't even make it up there. Looks like we're ABC done. Right here, potentially. That's a short too, if this is the case. That becomes a short too. Because all of a sudden now on gold, you're looking at a wave 2 that only gets you up there. Let me flip this around. Not even 38.2 on that. A decline here below this swing low would kind of set, lower lows into motion here. So that's below 18.17 and 10 cents. If this is one and this is a very short 2 here, I mean, all of a sudden, guys, you're looking at a wave 3 target. Minimum wave 3 target down here of 16.28. That's just wave 3 of A. Wave 3 of A. So, we'll see if we get that lower low off here. I'm just trying to see if maybe there's some way we can get an ABC, ABC, and then 5 up. I guess maybe you could have an A here and a B here and then a 1, 2, 3, 4, 5 maybe as a C. So maybe you could have a flat going here. So we'll see. We'll see. Do we get an impulsive breakdown of this support? If we do, that says wave 2 is probably done. If not, if we can get a reversal around here and head back up, then we're probably looking back up here around 1872 at least, potentially up here to around 1907. So we'll wait and see what happens here. We do have room here on the 1 hour for Stochk RSI, or for RSI to fall down into oversold. It hasn't done that yet. It's bouncing right here, just dipping into it a little bit there. But no bullish divergence or anything on that, notice. Lower lows there with the oscillator, lower lows with price. Silver doesn't look a whole lot better, guys. Let me see here. There we go. There's silver. Silver, I think, is done a 1 and a 2. So, I mean, silver's done a 1 and a 2. That would make sense that, or at least I believe it's done a 1 and a 2. I've got to count it here as such. Gets rejected here at the pivot. I mean, it makes a good case. But we still need to get down below the swing low here, down below 24,365. But, if this is done with 1 and 2, then, it makes sense that that gold would be done with 1 and 2 there. If we look at this here, if we zoom out a bit, give you a little bit better idea of my chart here. I'm looking for silver to be under $8, guys, probably closer to $4 to $6. With gold going down to around $900. All we're doing really right now is bouncing off this high volume node here, if we look. So if this is 1 and done and this is 2, this gives us a wave 3 target. I just pulled that down there. I'm just kind of trying to eyeball this with bad eyes. Right around $19.91. Get you right around the top of this demand structure right here. Gives us a 5 down here at 18,465. But that's a 5 of, coming off of 3 here. We've got a 1 down, 2 up. We're just working on 3. So if we look at that, where does this large 3 head to? Would give us a target of, let's see here. I can get it pretty close. If this is 1 down here and this is ABC2 up here, that gives us a wave 3 down here of 15,145 and a wave 5 down here around $12. And that makes sense. You get 5 down near the swing low here. So that becomes your A. Your B pushes up, probably gets caught right in this area here, $17 to $18, this high volume node. And then C down. And so if we do that, whoops, where did I say that was getting? Around $12, 7 cents or so. Something like that. Let's say we get up here to the high part of this node here, right around this area, around 17.5 or so. AB. And then you get, 1-to-1 ratio drops below 0. So you're probably looking maybe around here at $6.70, maybe $5.15, something like that, as an ABC maybe. That's still a long way to go, though, guys. Lots to still go on there. But, let's keep you, out of the emotion and looking at the real possibilities of what may be happening. This doesn't guarantee it has to go down, but right now the count fits so far as it's going down. If we advance above this swing high here, this $28.10.5, then I'll be leaning toward potentially one more wave up and then down. But as long as we're below this swing low here, I think we're headed down. There's no reason to think up until we're getting above that. But even that, it still has to get above the previous swing high. But I think there's a big case for it. I think you get a 1, 2, 3, 4, 5 then. So still a possibility, but, again, I continue to look lower because we're not above that area there. Let me see here. Powell was a good trade. POWW this week. Yeah, another one of our hard takes. Yeah. That one did well for sure. Hank says gold is looking for, what are you looking at? A nice flag on the weekly for the handle of a cup and handle. Let's pull silver or gold back up there again. Let's see what Hank's talking about. Let's bring this up to the weekly. Hank thinks this is a cup. This is the way he's playing this. This is a cup and this is a handle. Possible. Sure, possible. Right now, price is hanging right above the weekly. I think if you lose that weekly, and especially this swing low right here at 17.67 and 20 cents on the weekly, I think at that point you should be bearish. You should be looking for further downside. This was the channel here. You notice we had the pop above and then the drop right back into it. So can we draw a different channel off that? Sure. Something like this. And this would be a good base channel. Again, you would expect price to accelerate on the downway now as it drops on through the support for wave 3. So yeah, I mean that, as far as Elliott Wave goes, again, this would be a great base channel. Provides pretty decently there. I'm going to get rid of that right there. We'll just leave that on there. So what we look for is, do you get a decline below? I mean, like I said, if you're dropping below the pivot, especially impulsively, and you're closing below it on the weekly, I think that's all said and done. Get below this swing low right here at 17.67 and that just adds confidence to it. Drop through this base channel support here, especially impulsively coming off this top here. I mean, you're writing the book on a wave 3. And so that potentially gets you down here at least around, 1496 or so at least. But even that doesn't mean it has to go down to 900. But, everybody's been calling for these super highs, 2,500 here in the next month or so, and all these things they've been talking about the last few months. I mean, if it even gets down here to 12 and a half or, 1,100 or something, I mean, I'm a lot more right than wrong. A lot closer to being right than wrong. So we'll see. We'll see what goes on here. But right now, the way it's playing out, it doesn't look particularly strong. We are in a downtrend here on the weekly. We've been on a downtrend on the RSI since August of last year. Lower highs, lower lows. Stochc RSI just crossed bearishly here in neutral, so it's got a lot further it can fall. As far as volume and price action goes, notice you've got this spike of volume. That's at the highs here. That's supply coming in. That's a significant amount of supply. Remember, we look at volume and price action because that's the one place that your big players can't hide. They can't hide their footprints. You're looking, where is all that big volume coming in? And in this case, it's coming in at the top here, which is supply, which means the big guys are sending it lower. If you're retail, you can't play against that. You don't have a clue or a prayer against it. But if you have to look at things as far as a weekly goes, watch for the loss of the weekly pivot. Watch for the loss of this swing low. Watch for the loss of, and then watch for the loss of the base channel here. That's the way you'd look. If you're getting that and down there, I mean, there's no reason for you to be long up 2,500 or something from that point. Until then, still a chance. So yeah, just kind of sitting there. You think this is a diamond right here? This isn't a diamond. Where would you be looking at a diamond? I don't even know where you'd be looking at a diamond because, your diamond usually are not going to be very, very, very good. They don't ever rarely look like this, as Hank knows. But if you're newer, you may think that diamonds are going to look pretty close to perfect like this. Most of the diamonds you see in trading are not going to look like this. They'll look something more like this, maybe. Some kind of real skewed looking thing. What you're looking for a diamond pattern is you're looking for consolidation here as you come up into it, to expansion, back to consolidation, and then your breakout. That's what you're looking for. Consolidation, expansion, consolidation, and breakout. It doesn't have to go like this, of course. You could finish your move up into it. Maybe this is a 3, this is a 4, this is a 5, and then this becomes a 1, 2, 3, 4, 5. So remember, diamonds, for those of you that don't know, Hank knows, but for those of you that don't know, diamonds aren't necessarily reversal patterns, nor are they necessarily continuation patterns. All they are is consolidation, expansion, consolidation. And then depending on what the wave, the wave pushes up into it, determines whether you come out one way or the other. So just something to keep in mind with that, guys. Because I see the debate every so often when there is a diamond potentially forming. But like, oh, it's definitely a, continuation. Oh, it's definitely a reversal. Well, it's definitely neither. Or it's definitely Not definitely either. There we go. Let me see here. So I'm not sure where Hank was talking about a diamond here, but I don't know. I mean, I guess maybe you're looking at this right here. Maybe. Right here. Maybe. But that's a pretty large diamond for this small move. You know, the proportion really seems kind of off if I was to look at something like this. My other problem is that you have, if this is the case, and I don't know if this is what Hank's talking about. You're yelling, read the messages at the screen, but it's not helping. It says diamond sort of, I said, as in these two channels, but the bigger channel is only validated by the EQ. Oh, you must be looking at this channel coming off here then, huh? Like that maybe? Man, I don't even know. Let me see here. Okay, Hank's got a picture here. Let's pull this up. That is what you're talking about there. Yeah, so you're talking about this being the triangle. Yeah, or the diamond. Yeah, what I was just looking at. This area right here. But yeah, so my problem with that really, I mean, overall it's okay, I guess, but my problem is you have this move right here, which creates this range. And for a diamond, you have one high, one low. You don't have a high, a low, and then right back up to that high. Because that kind of defeats the purpose. Remember, again, it's the whole idea of a contraction into an expansion into a contraction. And this right here would basically have, we can do it from the other way. You have a contraction into an expansion, into a continued expansion, like this. And so maybe out here. But it's this second move right back up to the similar area. If we hadn't had this wick right here at the top, I'd be more prone to kind of look at this maybe. You know, if it had been more like this. But that wick coming up that swing high really suggests that it probably isn't. And then when we look at that again, the idea being that if we look at the volume profile on that and where that volume is coming in, let's take everything off here. You see this big spike of volume? It's coming in this move at the top. So it hits a whole huge bit of supply, sends it back down. And so if this is the end of a, you know, coming to the end of a diamond here, we would look for volume to be down here at the bottom, not up at the top coming in like that. You know, we had the same thing right over here as well. A little bit of a spike, nothing really, just a little bit of a spike up there. But then it hits that same area again, and you have even more volume coming in. And it spikes off because volume was dropping off on the move up. So we have this advance off the lows on decreasing volume, and then a spike of huge volume coming in at the top. That tells me it's headed down, because that is a ton of supply coming in at the top like that. Yeah. I think that's probably, like I said, I think if we're looking, I mean, you know, I can't guarantee, obviously, that what I'm saying is correct as far as, yeah, it's not a diamond or whatever. But, you know, if I'm looking for a diamond, this right here throws me off, this spike, this wick up to the same level here. Because all of a sudden it creates this range here rather than this high, low consolidation and then break. There's no consolidation in these 3 points here. And then, like I said, when we look on beyond that, you know, the volume coming in there. But right now, the reality of it is we're still above the weekly pivot. So until we actually lose that weekly pivot, you know, it doesn't necessarily kill you to be long. But, you know, once you lose that weekly pivot, especially if you lose it impulsively and get a good close below it, then you know, and if it does that, if in the meantime it gets beyond this swing low right here, then I think it really starts building that case for that much further down coming on there. But we have to get through the pivot. If you're looking at the weekly here, you have to get through the pivot. You have to get through the swing low. And then you have to get through that base channel. So 3 different ways you could look at it there, for sure. That spike is a bear wick. Not sure what you mean by a bear wick, more likely. A failed breakout. This right here. Yeah, the thing is all that the supply that came in right there. Remember, the whole idea is we want to see where are the big players coming in. Retail is liquidity. The big players are what you want to see. And again, all that volume came in right there all of a sudden. Lack of volume going up. See how that volume drops off, moving up here through these couple of months leading into it. And then all of a sudden it gets this pop up here and immediately hits this level up here and gets shoved right back down. Huge volume comparatively. And that's what I'm looking at that point, yeah. So we'll see. Like I said, looking at that, it tells me we're probably headed down. But again, it's all about confirmations when we're trading, right, folks? So if you're looking at the weekly on this, your confirmation comes on an impulsive breakdown and close below the weekly pivot. That's your first clue that is likely headed lower. Second clue is a decline and close below this swing low. Third clue is a decline and close below the base channel here. And then you're looking down here toward this S1 pivot, this higher volume node around 1500. Looks like about where wave 5 would hit. And it makes sense. You come on down to hit that the high volume node. Then you pop up a bit, come on back down further. Yeah. So that's what, again, looking at that, this is all the havoc that is being caused by, the DXY. Same thing we've talked about here. If you're interested in, remember the USD yen and the Euro USD make up almost 70% of the weighted basket. That makes up the value of the DXY that the dollar is compared against for the DXY. This is the USD yen. Looks like a possible bottom down here. Again, still looking for some higher movement up. We did get above wave 4, so that's a good thing. Now we want to see, do we continue up higher here? Or, we've only had a pullback to the 50%. So it's possible, that maybe we've got 1, 2, 3, 4, 5 maybe as an A, and then ABC as a B. And then we're working on a C down here, maybe to around this 70.5 area, 103 potentially. But as long as we're above these swing lows here, we should look for higher. And if that's the case, we've potentially got a wave 3 minimum here of 104.082 right now. And then a minimum wave 5 up here at 104.192, which also happens to, as you can see here, coincide here with this little bit of a higher volume node. This is the supply up here. So when you hit this, people are protecting their position. So you got 2 things going on. You have all these people who were shorting in here, right? So when it comes back up to them and it hits back up in there, they're going to try and protect that. They don't want price to go above that because they're short. The other thing is people who missed the opportunity to short here are thinking about shorting here as well. So there's extra supply coming in. Hit it once, boom, pull back, hit it again, send it down lower. We pick up our demand from down here. See if we can rise up through that supply then. See if we've taken out enough of that supply that's in there to continue up higher through it. Based on this ending diagonal idea here, based on the height of this diagonal, the pattern target is up here around 104.88. So also looking at that as far as the target goes on that. Let me see here. So there's that. If we look at the Euro USD, which makes up significantly the most of the basket that the dollar is compared against, it makes up about 57% of the weighted basket that the dollar is compared against. Again, I've got 2 different counts on here. I've got the red count and the blue count as possibilities. Right now, we're right around my wave 5 target here for the red count, which gets us an leading diagonal. And if we get a reversal off here, we should look for a move up probably toward this 122 area, 1.22 area. It could go higher than that, but that would be my first target area. Look for a rejection off that and continuation lower. If it continues going lower here, then we have this other impulse idea. So 1, 2, and we find a 3. We look for price to target down here around 1.9776. What you're going to have here is because the euro makes up such a big part of that weighted basket, most often the euro and the DXY are mirror opposites of each other. So, this is the euro against the dollar here. Let's look at this right here. And if we compare the DXY to it, which is the dollar, you'll see what I mean. There you go. And let me go and make sure this is logged too. Oh, this isn't even logged at the moment. Okay, there we go. Oops. But there you go. So you have your Euro USD and your dollar. And if you look back historically, they more or less are pretty mirrored to each other on there. So again, if the DXY is bottomed, then the euro is topped. If the euro is topped, then the DXY is bottomed, is how you're looking at it. Sorry, I just have to look at this and go, hey, look, it looks like an inverted head and shoulders here. Interesting there. But, so again, the Euro USD looks topped. The USD yen looks bottomed. And so if you've got those two reversed, there's no reason the DXY isn't bottomed. Because, again, it's the dollar against, that weighted basket. And almost 70% of that weighted basket's value is derived from those two, from the euro and the yen. So only 30% is derived from the other pairs that are in there. So how does the dollar not be bottomed if the euro USD is topped and the USD yen is bottomed? It can't be. Again, that's 70% of that weighted value. So we'll see. Again, no confirmation yet on the DXY. We're definitely looking at that move above 4, wave 4, but that's kind of where we're at with all that. And so, again, we're looking at that wave 4 we're trying to get above here with the DXY. It's the same wave 4 here that we're trying to get below on the Euro USD to kind of confirm that idea that the top is in. It's just a little bit lower here. And if these are reversals, on a pullback here, you could short the euro and just hold it for months and just make all that money as it continues to drop, shorting the euro against the dollar. Or long in the dollar against, or just long in the dollar. I mean, you can go in, the CBOE, I believe, has the dollar futures over there. You can long dollar futures on that. You can't actually trade the DXY itself, but there are futures markets for dollars that you could long or short the dollar. Or you could just play the Forex market, the FX market, like I said, short your euro USD. To me, that makes the most sense because it is the most liquid pair in the Forex market. So the Forex markets are your most liquid markets in the world. And then of that, the Euro USD is the absolute most liquid pair. So you get your smallest spread on that. Many platforms have it below 2 pips. Some have it even around 1 pip. And so, again, it costs you very little to get into it. And then there's a lot of potential leverage that you can have with it, just riding that out for a big move. If you play your USD yen, you're going to pay more on the spread because it's not as liquid. But you can long the dollar against the yen, or long the dollar against the Swiss franc, or short the dollar against the cable, short the dollar against the Aussie. You can do that, but all those other things are going to cost you more in terms of spread, or if you pay commissions on that, because they're all less liquid than the Euro USD pair. Bitcoin having problems with the liquidity again. That's what you guys are saying, or not liquidity with gravity. What do we got here? Yeah, Bitcoin trying to head on down there. But again, let's see here. We'll see if we can get a bounce at about 50%. So right about this, it's trying to bounce right now just above it, right around 34,930 or so, 925. We'll see if we can get a bounce off that. Continuing down low that, then it starts to look like we'll maybe get a new lower low off that. But remember, this can still be a triangle as long as wave C, as long as it's 3 waves down and wave C does not drop below wave A. But if I'm looking at this again, the way I'm counting it there, it looks like this is 5 as a leading diagonal. So there's 1, 2, 3, 4. But again, you could get 5 and then 3 up and then 5 more down to just get a lower wave C. Get you a little bit wider triangle. But if that price drops below 30,100 here on Coinbase, or whatever your equivalent is on the exchange you're using, just below this swing low over here, that invalidates the triangle definitely. So, again, guys, the difficulty is that we are in a range. I mean, big pictures, we are in a $12,000 range. So there's different possibilities that could be happening within here. You're trending once you're moving out of the range, which makes it a lot easier to figure out where you may be trading. But as long as you're in here, there's going to be a lot of this overlap, a lot of this what we call noise, until you get that break out of that range. So that's why we talk about all the different possibilities so that you're aware, because nobody can sit in here and tell you definitely the price is going to do A, B, or C. Nobody knows for sure. Nobody knows for sure, guys. They're going to come off and act like they do. Nobody knows for sure. The best thing you can do is understand what may happen and where your validation and invalidation levels are. If you can do that, you've got a good chance of making a ton of money. As long as you believe somebody that tells you, listen, price is definitely going to do this, you're going to lose a lot of money. They may get it right that one time. Maybe. Heaven forbid if they do, because then you'll think they know what they're talking about and they can guarantee what price is going to do. Nobody can. Been doing this too darn long, guys. What does it mean when it's not in a triangle? It just means we come down lower. So minimum, this is A, this is B, and you got a minimum wave C at either 28,760 kind of area or 28,271 minimum. If you continue down through that, then you start looking down here around 24,690. And it starts getting more like, if it continues going down through that, it starts becoming more like a 1, 2, 3 rather than an ABC. But it doesn't necessarily keep it from being an ABC. You just have to lean more toward further downside as a 5 count rather than a 3 count corrective. So, yeah. Hey, I appreciate you, Crypto Girl. Thank you. Thank you. Hank thinks that the cable looks bullish. If you do the USD Great British Pound, and bearish if you do the Great British Pound USD. No, it shouldn't be. They should look at the exact same. They're just the opposite. My count right now with the Great British Pound against the USD. How's this right here? I'm potentially looking at 5 finishing up as an ending diagonal here. Did it make this up higher? Let me see. We've got a swing high here of 37,039. We've got a swing high here of 37,106. I mean, so it's possible. I mean, I was looking for a little bit higher up, but it's possible. This is just high enough. We could be done. If prices drop in here below this wedge support here, kind of pull us down here so it's out of the way. Prices dropping below that, I think that pretty much says tops in. If you want to wait for more, you can wait for a breakdown here and a close below the pivot, the daily pivot, or this swing low here. Kind of like what we were talking about on that other thing that we were looking at, gold there. Look for a breakdown of the pivot. Look for a breakdown of that immediate swing low right there. In this case, it's 1.3451. And then finally, of course, this ascending channel support. You get a breakdown of that. You have a pattern target of 471 pips below the point of breakdown. But again, I believe this gives us 5 up here, and so we're headed down at that point. We've got this long bit of bearish divergence here from July of last year. So 6 months of that or so. It's the end of July. So what? August, September, October, November, December, January. Yeah, getting on about 6 months of that right there. So yeah, I mean, no guarantees, guys. The one thing I want you to remember is, I talk here and sometimes maybe I sound a little bit more confident about the things I'm saying which may make you think that, oh, I definitely know what I'm talking about and things are definitely going to do something. But guys, please understand, I would never tell you that price is definitely going to do something because I don't know. Neither does anybody else. The best we can do is look at what's going on with what we know about how markets work and things, and and give our best guess. But that's why every time, every day I tell you guys, the only thing you control in the market is how much you lose. Your risk management is what it's all about. That's where you make your money. Because you're going to be wrong a lot more than you'll ever be right as a trader. I promise you. Just if you're lucky enough to be a trader for 20, 40 years, I guarantee you're going to be wrong more than you're ever going to be right, especially the first 5 years or so, first 5 to 10 years maybe. Because you're still trying to be emotional. You're still trying to take more trades than you should. You're still jumping in a trade just because there's a chance. Once you've been in 5, 10 years, some people have a little bit earlier, maybe 3 years. I don't know. I think generally, guys, as traders, it takes about 3 to 4 years to really get comfortable if you're doing it right. And then I think it takes another few years to really kind of, just to get comfortable with what's going on with markets and how to trade. And then I think it takes another couple more years to be comfortable with yourself, to where you don't feel this desire to have to trade every single move, to where you step back and you just look at the more higher confidence trades. You take less trades, but the trades you take have a greater chance of being correct. Which means because you're taking less trades, you have less times that you're going to be wrong, which means less drawdown on your account. And your account grows because of compounding in time. The two keys to being a successful trader, guys: risk management, proper risk management, and then locking in profit consistently. If you can do those two things, there isn't a lot stopping you from making a ridiculous living as a trader. But maybe you're hearing it with yourself, and maybe you've tried it and you find out how difficult it really is to do. It's hard to get yourself out of the emotional stuff that you do at first as a trader. It really is. I talk about it up here, and maybe when I talk about it, it sounds like, oh, it should be no problem. You should be able to do it. And then you get upset at yourself because you can't do it that easily. I'm not saying it's easy, guys. It's not easy. And it's something that you'll always have to deal with as a trader. You do this for 20 years, 40 years, whatever. You're still going to have times where you feel a little bit depressive or a bit euphoric. You just have, your tool set is better to deal with it, right? You deal with it better. You've learned over the years habit of how to deal with it. So it doesn't keep it from happening, but it happens less. And when it does happen, it's not as strong as what it would be when you first came in. But when it comes to trading, guys, there's absolutely no replacement for actually getting in there and doing it. Time in the seat. You got to have that time. So yeah. But anyway, so there we go, guys. That's it. Tell you what, have a great weekend, man. I tell you guys, seriously, if you like this, if you want to learn more, if you want to learn deeper about, macroeconomics and global finance and policy and how that affects the markets, socioeconomic theory, all these things that really are the base of what I do, Elliott Wave theory, stuff like that, Wyckoff, come on and join us over at That Isn't It, over at howtotradetowin.com. We'd love to have you there. Like I said, right now you can get 25% off. So, if you just want to try it for a month, you get 25% off that first month. If you want to dip your toes in a bit more, you can get 25% off 3 months or 6 months or a year. I would suggest if you're just going to do it for a month, if you think all you're going to do is for a month, do tier 3 because you're going to get the most out of that. But there's probably more content there than you can absorb in a month. You can sure try, though. You can get a lot of that education done with it. And if you first join, I don't know how many of you guys have ever used Discord before. Again, we do have a significant amount of content, guys, and a lot put out every day. And sometimes we have new members that are a bit overwhelmed with tier 3. So you just start off, if you get tier 3, start off Bitcoin channel, watch the chart request channel. That's where I post the charts that people request. Watch the hot takes. Those are the setups that I do throughout the week. And make sure you attend, or if you can't attend the live stream on Wednesdays where we teach you new stuff, watch the recording of it. If you can do all that and then the other educational videos we have, that's where you would start. Don't feel overwhelmed with tier 3. We've got a lot of stuff, a lot of discussion channels. Again, we update about 20 assets every day, sometimes for some of them intraday as well. So it can be a lot at first, but just take a deep breath. If you're new, say hi. If you want a suggestion, again, I just told you where you could probably concentrate your attention if you're coming in, but if you want me to tell you again, just DM me when you join. I'll be glad to help you out, give you direct links to things. Or Adam. Adam will help you as well. Or Scott. Anyway, guys, listen. I really appreciate you guys. Thanks a lot for, spending your time with me a little bit here on a Friday. Lots of stuff coming out with TWC and a few other things I'm doing here in Q1. So definitely keep following us. Follow me at DXY Capital. Follow Scott Melker. If you're not already following him, follow him at Scott Melker on Twitter. And then, of course, join us. HowToTradeToWin.com. We'd love to have you there. You guys have a great day. Take care. Trade safe. Remember, the only thing you control in the market is how much you lose. That's it. And we will see y'all on Monday. Have a great weekend.